The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 1st terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin with my favorite, empowering belief, because it encompasses everything from A to Z, and that's called become your own electrician, the electrician of your beliefs. If you get this, if you can pass this down to your kids, if you can live this law of life out here, life is a beautiful thing. And the reason is because beliefs, our beliefs, they've got the power to create and the power to destroy. You and I, we have that incredible, extraordinary, awesome ability to take any experience of our lives and create one that either empowers us and takes us to places we never even dreamed of before, or we can be a negative meister. We can use that belief system to disempower us. Well, I know all of you listening out there, none of us use that, but we know folks that do. Therefore, it's our responsibility, it's our rule to be able to teach them this. Think about it like this. This is what I want them to understand. There really is only one thing that we can control in life, and that's the meaning that we give to something. It's the beauty of the markets that you and I trade. There's bulls and there's bears. There's one that sees a event as a selling opportunity and one a buying opportunity. You see, it's our beliefs, the meaning that we give to events, candlesticks, patterns, whatever it might be out there. We're the ones in control of that meaning. Pretty cool when you think about it as applies to life, because what we can or cannot do, what we consider possible or impossible, it really is rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters because each of us are always trying to break through. It does not matter what level you're at. Because if you're not growing, if you're not living, you know, well, if you're not growing, you're certainly not living out there. And so we're all trying to break through, no matter how successful you are, no matter what it is that you're trying to overcome. And so the question is, how do we change? I found the most effective way is to find what your disempowering beliefs are. Figure out what it is that's holding you back. Write that down. Don't try to figure this out in your head, folks. If you could have figured it out in your head, you would have done it already. You want to put this stuff down on paper. I know we don't use paper that much these days because we're always typing things in. You know what? Write these things down on paper. Pull out your pad out there, because we've got to believe at our deepest level that disempowering belief has cost us in our past, continues to cost us right now in our present, and ultimately will only bring us pain in the future. That is called the Charles Dickens process, and that means that knowing what you don't want is just as important as knowing what you do want. And the reason is this, because we need to replace that disempowering belief with what it is that we do want, a tremendous, pleasureful idea of adopting a new, empowering belief strategy. And here's the deal. You've got to know that no matter what, at any moment in time, a decision that we make can and will change the course of our life forever. Could be the next person we stand behind in line, sit next to on an airplane, the next phone call we take, the next phone call we make. Maybe it's the next email you send. Could be the next movie we see, the book we read, the newsletter we subscribe to. Could be something that comes from one of the contributors here at TFNN. Any one of these things could be the one single thing that causes the floodgates to open. And then all the things you've been planning for, they fall into place, folks. That's the epiphany I had when I developed the Rhodes Momentum Indicator market trading strategy. Let me tell you, there were hurdles that I had to overcome out there. No different than each of us in life. We've always got to overcome those hurdles. We'll utilize some of those charts here today to get an idea of what the markets, what's communicating to the markets out here for us. But right now, let's go check out these markets. We've got the Dow up 103 points. She's trading out at 16,561. S&P up 12 points, trading at 1884. NASDAQ up 53 points. That's leading the charge. The upside up 1 3/10%. It is trading out at 4252. NDX 100 also up 1 3/10%, up 49 points even. Steven trading out at 3644 and change. Russell 2000 strong this morning, up 0.9%. Up 10 points. We got the New York Stock Exchange. It's the laggard. something to think about there. Why is the NYSE the laggard out here? It's only up 0.4%. Hey, it still has pretty good advancing issues, 1097, so you've got advancers outpacing decliners by a little over 2 to 1 out there, so not too bad, not exactly fabulous, but still not too bad. Our call number is 877-927-6648. Let's go check out these markets here. Let's go see what it is that we see. Let's go ahead and put up the Rhodes momentum indicators out here. Let's take a look at the, which one do I want to use? Let's just take a look at this chart here. It's not this specific chart. Let's go take a look at the NASDAQ composite. Let's take a look at a daily chart, see what it is doing, because it's the weak link out here. And today, now with a moving above 42.3301, it closed above 42.3301. That is bullish out here. Now, still weak as we go measure retracement levels, and we'll do that. We'll do that later. But the key number to be focused in on today is 42.3306. That is on the NASDAQ composite on the daily. We're going to switch over to the monthly here real quick because the month did end yesterday. So let's see what took place with yesterday's candle session out here. And on the monthly chart for the NASDAQ composite, as weak as it is, the monthly chart is saying, I don't think so. That was the best that you could throw at me because the monthly chart is absolutely saying right now, I don't think so. No bearish reversal signal there on the monthly chart. So all looks good. The weekly chart, a little different story out here. We've got the price relative strength divergent pattern. So the NASDAQ composite is not going to clear the woods until it gets over its resistance areas. They are very clear. The resistance, by the way, now is at its all-time highs out here. March the 7th. The number out there is 43.71. Look, any close above that on a weekly chart out here would be very bullish. Why? Because on the monthly chart, it takes you right into the 2,000 swing point, the high in 2,000 inside of the NASDAQ composite out there. So last month was a test of the swing point low, and it was a rejection of that area. Let's go check out the, let's see, we got the Dow. Let's take a look at the Dow. Then why do we want to look at the Dow? Because, well, it's really been a strong link out here. So now the Dow is actually moving higher on less relative strength. The swing point of the Dow on the weekly chart, that was the January 3rd level out here, that high for that week was 16,588.25. You are trading at 16,548. So it is trying to, it had to take on that level. What's the high we've seen here? 16.5, 65. No, it didn't. It doesn't have to take on that level. In any event, so it is trying to get up and over 16,562 out here. Likely we'll see that move today inside of the S&P 500. What we do need to note is that it is moving higher on less relative strength. Never a good sign. That is the strong link out here. That's the weekly chart. Let's look at the daily chart, see if there's any patterns out here to be concerned with. Really, again, you've got that the all-time high here, which was December 31st, the very following session on that January 2nd session here. What we did see was a bearish engulfing candle. That says that is our resistance level. So you get above resistance. Old resistance becomes what? New support out here. Has not done that yet. Be watching to watch what happens. Watching to watch. How about that for great grammar out here? Make sure to watch what occurs as price gets to the 16,588.25 level. Does it test it and reject it out there? Or does it test it and move higher, therefore making that a level of potential support inside of the Dow? Let's take a look at the trannies out here. Let's go see what the transports are doing. Transports right now trading out at 75, what is that, 75.96. They, too, are trying to get over resistance. Their resistance point is from March 13th. Again, it's a daily chart we're looking at. The level there is 76.24.11. You're at 75.96.51 out there. So if you see the transports get above that, close above that, that would also be bullish for the market. Let's look at the monthly time frame on the transports. Let's see what they did here last month. Any kind of reversal signal to be paying attention to? Boy, absolutely not. Transports are strong. Strong like bull, like this bull market that we are in here, certainly as we take a look at the monthly charts. Let's take a look at the Dow Jones. We took a look at the let's take a look at the NDX 100. So the NDX 100 on the monthly chart. We finished out the month of March, and what did it give us? No reversal signal at all. Almost just created a higher high. That's it out here. So nothing bearish on the monthly. On the weekly out here, a little bit of a different thing. Just looks like really like composite. So the key number to be watching here, the weekly chart is very, very positive with a move here above the, let me see if I can around 36.25. They'll call 36.26 right now. You close the week above 36.26. That would be nice and bullish. The weekly chart never got into any kind of. We saw some pressure on it, but the trend never broke to the downside. So what's important here inside the Index 100 from a bullish standpoint is clear resistance. It's the highs from March 7th. That's not good. It's the highs from March 7th. That price is 3738.32 out here. You get above that, and that would be extremely bullish on the weekly chart, and that would erase some of the concern in with that price relative strength divergent pattern that is going on out there. Let's take a look at the New York Stock Exchange out here. New York Stock Exchange closing out the month. Let me put on the monthly chart out here. Closing out the month above that 10,387 level. That's important. Why? Because 10,387, that happens to be the October 2007 swing point. So, you get above that. That means that you're now breaking above a long-term consolidation, a 6,000-point consolidation level. Do you hear what I'm saying? It's a 6,000-point consolidation level that the New York Stock Exchange closed above here last month. It's the second month that we've seen it, albeit not with exactly conviction, but nonetheless with it's up above resistance. So it's above old resistance in 2007. It has cleared that area. On a monthly chart, it's up above resistance that was created by that bear sash candle here. That was from January. That made that December 31st high important, which was, by the way, 10,406.77 or 10,572.39. Beautiful looking monthly chart out here. Bears never were able to do anything on the monthly chart. Let's take a look at the weekly chart, see what they were able to do, if anything here, what kind of pressure they were able to put on. Really absolutely none. Now, what is the New York Stock Exchange doing? It's continuing to move to higher highs on the weekly chart and doing it with less relative strength. It's just nothing more than a warning sign. It's, we use this tool here to identify when markets are going to, or when markets confirm that they're reversing, but moving higher on less relative strength, that can be resolved just simply by markets continuing to move higher and getting more strength within inside it. So it's nothing more at this stage here than a warning sign on a weekly basis here. What would erase the initial concern out here, the initial reversal signal that we saw? That would be a close above 10.550.24. You're trading at 10.574. A lot of time left in the week. It's early. It's only Tuesday in the session out here, but so far so good on the weekly chart for the NYSE. Let's go check out the and you've got, a couple of rising windows the last 2 days out there, 3 of them in a row. How about that? That's a bullish sign. Of course, there's no futures market that's being traded here for the NYSE, so the gaps have a little bit less meaning, in my opinion, inside. Well, yesterday, a little bit of a less of a meaning out here. In any event, let's take a look at the Russell 2000. We'll have to do this when we get back from the breakout here, but on the daily chart, getting above 1175.80, and it's at 1183.50 right now. That is bullish. We'll take a look at its retracement levels. Let's see how it finished the month out here. Any kind of reversal signal inside the Russell 2000? Well, we had a doji out here. That says this month you get a lower close than where we closed out last month, and the leaves will be falling off the tree inside the Russell 2000. That means we've got an area of resistance to identify. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 91 points right now. S&P is up 10. We were looking at the Russell 2000 here. So it closed out the month really with a doji candle. If you take a look at the open and close, the open was 12.80. The close was 11.73. No, I'm sorry. The open was 11.74.20. That didn't make sense. And the close was 11.73 out there. So the open and close basically being the same out there. Now, a little doji in Stevie's window out here, that ends up being a resistance level now. So that high of 12.80, that's really what the number I was looking at. That's really your next, in essence, resistance level out here. If you see it close below the 1173 mark here, and this is for the month of April, that would actually be somewhat bearish out here. And that's really how you use a doji candle out there. They have their most meaning at resistance areas out here. That's the way Stevie uses a doji candle, is really what I should say. If we take a look at the weekly chart here for the Russell 2000, Russell 2000 still has that price relative strength divergent pattern, needs to overcome the highs here from the month of March, so that becomes important. That 12.80 number, close above that, would be very bullish. That's inside the Russell. Let's take a look at the SOX, see if the SOX index is still on fire out here. One of the best performing of the sectors or indexes out here, and yeah, it's on a weekly chart. It's bullish this week. If we take a look at the monthly chart out here, nothing bearish on the weekly, nothing bearish on the monthly, that's for sure. Straight out at 591. Let's take a look at a daily chart out here for the semiconductor index. So the semiconductor index now, at least on a daily chart here, we're seeing some signs of potential weakness and that it is making higher highs, doing it with less relative strength. However, right now, It's up above the resistance. Now, this is a daily chart, so important session here today is it's trying to get up above 591.11 out there. Getting above 591.11. We'll go ahead and we can abate the early warning signs that we saw back here the day of March the 26th, which did have follow-through on that's reversal signal out here. But that is the resistance level. The close above that would be bullish, and then just simply it's making higher highs here on less relative strength, but that can continue on for quite some time. Let's go take a look at the ETF structures. Let's go take a look at what kind of volume we've got going on right now inside of the, I'll start off with the first one that pops up on my screen. Let's look at the Qs. So if we look at the Qs, what did they do? The Qs formed a nice little 0.68 Gartley buy pattern. You did not get any reversal signals here. Yesterday we saw move up to the dead cat bounce area. Did it with light volume, making 33 million shares as it made the 0.382 retracement. You're up above that level today. Looks like it's headed to 89.47. Right now today we've done 12 million shares in the first hour of trading, so not too bad considering yesterday was 33 million shares out there. Let's switch down, take a look at a quick 5-minute chart, and let's see what kind of volume patterns we can see out here. Let's just simply delete that and see what we see. So yesterday you can see big move up in the morning, and then that was it. The first 5-minute session saw 2.3 million shares. Yeah, March the 31st yesterday. And then volume just simply dropped off the planet. Look at this. When you take a look at the volume pattern that was going on, let's call it from 11:30 on, there was basically no volume whatsoever inside of the Qs out here. Today, let's say other than right at the close. Now this morning here, a little bit different story here. Gaps up only 1.8 million shares versus yesterday's gap up with 2.3, so still not too bad. But what we have seen here is steady buying. So we have seen some steady volume here. We have not seen volume drop off as it has moved higher. If anything, right now, volume is starting to dissipate as it's moving a little sideways here up at this upper part of the trading range that it's in for the day. But a little bit better look than yesterday. We'll know more from 11 o'clock on. We'll see if the volume here just simply drops off. That would not be necessarily bullish. That, in fact, would be telling you you've got distribution going on at the highs out there. It should see more follow-through than that. But so far, so good on the daily chart here for the Qs. What's it likely to do? 89.47, maybe the $90.30 mark. That's your 0.786 retracement. We want to watch the Qs, the NDX, the composite, to see what they're doing volume-wise, see if they're getting any giddy up and go. Let's take a look at some giddy up and go inside. Let's look at the diamonds here. Let's look at the diamonds here next. Giddy up and go inside the diamonds. They're taking on the all-time high swing point now of December 31st. It's got 5.6 million shares, so that's not a lot of volume. Easy for the diamonds here to get above that area and do it with gusto, and that would be with more than 5.6 million shares. The high there is 165.51. We have not tested that yet, but we are inside there with 1.5 million shares, an hour worth of trading. We'll go down and we'll take a look at the 10-minute chart, see what's going on inside the Dow Diamonds when we get right back from this break. We've got the Dow up 88, S&P is up 11. Thanks so much for joining us, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 84 points right now. S&P is up 11. We were talking about the Qs as we went into that last breakout here. So let's take a look at what it's doing. Real important trading session, potentially really important trading session here today. And we're going to go take a look at the 10-minute chart just to take a look at volume patterns out here. Now, what the diamonds are doing here today, number one, are taking on 2 swing points. So the first swing point that we're looking at, the one that's closest to the left, most recent, would be March the 7th. That swing point at 7.4 million shares. So 7.4 million shares was going into the December 31st swing point, which only has 5.6 million shares. Now, of course, December 31st, it's really hard to gauge the volume on that trading session, right? We know that most people were out, getting their party favors together, light volume trading session, so to speak, as the markets were making their highs out there. So it's hard to say, was 5.6 million shares really the benchmark out here? So let's say that's hard to say, but it's not hard to say the price was pushing up into that level with volume. We're back up here right now, and so let's just say that the benchmark should really be 7.4 million shares. So if we're going to see a breakout inside the Dow Diamonds, don't use that, I'm suggesting don't use the 5.6 million shares from December 31st to close above 165.51. If this is going to be a nice breakout, you'd like to see that take place with more than 7 million shares. Now, the beauty of using that number is twofold. Number one tells you, okay, you've broken above that high. Number two, though, what you do is you confirm an A to B equals C to the upside. So therefore, today, A close above the number of 164.89. You're 165.02 right now. You do it with more than 7.4 million shares. That's going to be a move above a B point with volume, confirming an A to B equals CD to the upside. Why is that important? Well, if we take a look at that, we then have, and we'll go back and we'll take a look at the potential confirmed A to B equals CD to the upside patterns out here. So what the Dow would be doing is telling you wants to move to 172.15, the diamonds, I should say. More likely, I would have to tell you that they would likely want to move to 175.38. So that's pretty big. That's the equivalent of 17,500 and change out there inside of the Dow Diamonds. But first thing they've got to do today, and we want to watch, so you're trading above that level right now, meaning the high of 164.89, you're doing with light volume. If it can get some giddy up and go and volume in it, boy, that sends a powerful message with regard to what the Dow is doing. Now it's only 30 stocks, nonetheless. But you'll see when we go back and take a look at, let's first put this on a 5-minute chart just to look at volume. And as we take a look at it, here, let me pull this out. You had a nice move up, gap up this morning. 310,000 shares. Volume kind of dropped off. That 940, 945 came back at a 950. We saw about 167,000 shares. We're seeing pretty decent volume here during this first hour of trading, whereas yesterday we saw some nice volume at the open, pretty decent volume here. So we're at, about 10:30 right now? At 10:30 yesterday, things just really started dropping off of the map here. Totally started dropping off the map. So we'll see if that's the same kind of volume pattern that we've got here today inside of the Dow Diamond. So let me put this back to the daily. And what I was referring to, that ABCD pattern got a little messed up, but you took down the numbers. I'm sure you were taking notes out there. Why is that important? Well, if we go to one of the weak links out here, which is the IWM, remember the IWM had that wide price spread day back on March the 4th, and on March the 4th it confirmed an A to B equals CD to the upside. So, we saw price come back and form a little Gartley buy pattern. It did this on March the 27th. You might say, hey, Steve, how can that be a Gartley pattern? It's only a 50% retracement. Remember, H.M. Gartley never used the Fibonacci numbers. Those are just simply added later on by folks. May have been that Larry that, quite frankly, could have come up with the Fibonacci numbers. In the case of H.M. Gartley, he was just looking for the first lightning bolt pattern in a trend that you wanted to get back into, whether it's to the upside or to the downside out here, and that's all that was really required to fulfill that pattern. So inside the IWM, it formed a Gartley buy pattern. Right now it's trading up to the 0.618 retracement of its move here. That's your second level. Remember, there's always 5 outcomes of a Gartley pattern here. So 117.95, that is your 0.618 retracement level. But what the IWM already does have, it's got an A to B equals C to the upside. That has been confirmed. That A to B CD pattern out here would look like this. And even with the pullback, I would have to say price is still traveling on the strong side of that move out there, that move which would project out to about the 121 level, 121 to 125-ish range out here. But the Russell 2000, we want to watch the Russell because it has been weak, just as the Qs have been weak. And if they start to get some strength, what it tells us is that what the monthly charts were communicating to us was the trend, it's not over by any stretch out there. So and that means that, hey, the month of April, we just simply, it's got a nice month here where the markets could move higher into where? Into sell when? Sell in May. And actually what we'd probably take a look at doing is selling on April 29th out there. But one thing at a time. So it's important to be paying attention to the Dow Diamonds for the potential of the pattern that they would have setting up. If we take a look at the SPY out here, which I don't think we've done, guess what the SPY have done? The SPY's already confirmed an A to B equals CD to the upside. If we take a look at it coming off of and we know about the SPY here, is that so far from being able to even test the trend line. This is a trend line that I'm using just simply coming off the lows here in June of 2013. So this price down here, all that the SPYs have been doing is consolidating at the lows. And if you take a look at the A to B equals CD pattern that it confirmed, we're looking at the swing point from January 15th. So January 15th, the SPYs do 98 million shares out there. What do the SPYs do here on the trading session of February 28th when they get above that level? They take out the B point with volume. How much? 150 million shares was taking out 98 million shares. Yeah, I'd say that's a confirmed A to B equals CD up, and that would look like this. That would take price inside the SPY to a level of about projected to 194.20. You're still traveling along the inside area there. What's interesting is the SPY here, which has been traveling in a little consolidation box, sideways consolidation box out here. See if I can actually make this pattern. Here's the sideways consolidation box, which means a measured move when you break a consolidation, which the SPYs have not done yet. Should they do that, the measured move here takes us to where, look at that measured move. It takes us to the completion of the 1-to-1 A to B equals CD to the upside. So the key to that move being completed here is going to be what happens as price gets above, if price gets above 189.02. That is the swing point from March 23rd, March 21st out here. 163 million shares. You got into it yesterday with only 99 million. Today you've done 26. It needs a lot more energy in order to be able to take that level out with volume. But still, you know what? You already have the confirmed A to B equals CD to the upside. So we're going to cut it some slack. Any close above 189, 189.02, then price wants to go fulfill the breakout of that consolidation and the A to B equals CD. So we've got we've got two that have confirmed A to B equals CD up patterns. The diamonds, maybe we're going to get some type of a feel for that here today. The Qs, if we go take a look at what the Qs here are doing, the Qs here, did they take out a swing point with the volume? That swing point that we would use would be January 22nd, 29 million shares, and that was taken out with 40 million shares. So, yes, the Qs also have an A to B equals C to the upside that we can draw in here. That would actually go ahead and take the Qs up to the level here of, let's take a look at this. That would take you up to about the 96.41 to 99.83 type range out there. However, the Qs have got some work to do. Most certainly they've got work to do. They're traveling into the downdraft session here, 77 million shares, March the 24th. Of course, you know I have shared with you that the Qs have this unusual characteristic where you use volume differently than any place else that I have been able to identify, and that is where you need to open yourself up. I think you always need to open yourself up and look for different patterns in the marketplaces, and what the Qs do is they make bottoms with high volume. Now, the high volume inside of the Q took place on March 23rd. It's not unusual to see maybe a couple of high volume days to form that bottom. We didn't see that. Well, we saw an inside day on the next day on March 25th. March 26th was just a slight close lower, so that didn't bother me too much out there on March the 25th as they made a slight close lower at 40 million shares. And then what we got here, what's kind of interesting, is on March 27th, you got a volume of 64 million shares. So there's another high volume low, not as high as the one that took place here on March 24th. But look, that's the signature. The Qs make bottoms, short-term or permanent or significant long-term bottoms with high volume. And if you go back to the volume that was formed here back on February 3rd, really the same setup here. You had about 65 million shares out there. The actual low came in 2 days later, but you can see how the low of the February 3rd candle, that low was rejected out there. So you've got to use and it must be hedge funds that are either locking in profits or what have you, and it's just so much easier to go over to the QQQ ETF in order to be able to do that. And that's where you see some type of capitulation. There's something that goes on. I can't tell you why. I just know that it works out there, and that means that you've got to pay attention to those high-volume days. Why? Because when we take a look at stocks that move lower with volume out there, it's a whole different scenario. They're not usually making bottoms. They do at times, but they're usually not making bottoms. They're a precursor of more to come. And that is just simply not the case in the Qs. And you go back as long as you want and check out that pattern to see that this has been around for a long, long time. Well, I can tell you more than 5 years. So it's been around even from the highs in 2007. If you go back and you take a look at coming off of the highs when the market bounced, you're going to find out it was the Qs that were making high volume sessions there, and you saw at least a bounce. And not like a 1 or 2 day bounce. Usually it lasted for a pretty decent amount of time out there. So let's go check out some of the other key indicators for us to be paying attention to out here. Let's take a look at the VIX index, see what it is doing right now, trading out at 1333. It's well below the 50-day exponential moving average here, which is a number of 1473. So long as it's below the 50-day, tells you that it is, well, it's one of Stevie's liquidity gauges. Tells you there's sufficient liquidity in the marketplace out here. We covered, if you didn't catch the show yesterday, go back and listen to the archive. I'm not going to cover it here today, but I taught you what I tried to teach to you, or at least provide to you, is information of a low VIX has nothing, well, look, A lot of folks use that as a indicator that there's no fear in the marketplace out there. To me, it's a misuse of the real benefits of the VIX. A high VIX does not necessarily mean that the markets are going to move south out here. It's the correlation of where the 50-day exponential moving average is to the VIX that will give you more consistency with regard to where you should be in your trades out here. So look, when you're trying to catch a top in the market and sell, what you're also doing at the same time is you're going to be trying to buy a low inside the VIX that's going to be below the 50-day exponential moving average. But if you were short and you're still short and you see the VIX continuing to be below the 50-day exponential moving average, I'm just praying for you that you actually have a stop in place, because when you trade below the 50-day exponential moving average, I have no idea how long it will do that. It's telling you there's liquidity in the marketplace. Of course, that's not the only liquidity indicator that we have out there. Of course, we've got my favorite, your favorite too, and that is the Euro-Japanese yen, which now has made the 0.786 retracement level. 142.95 is the number. It's hit 142.90 out there. And this is important because as the Euro-Japanese yen moves higher, guess what? The markets will also move higher. And when there's divergence out there, it's a beautiful thing because it is the currency pair that is painting the direction for the eventual move up or down out here. So if we take a look at the 120-minute chart, in the first show we were showing that the what the heck is that? Oh, that's that one equity we were looking at. We were looking at the Euro-Japanese yen on the 120-minute chart. It was making a higher high. It was doing it with less relative strength. Let's see if we still have that pattern in place. We do. 72.64 is the reading versus that high of 75.04. So we're making a higher high. Why is that important? Well, if you come take a look at the significant turns in the marketplace, look, these patterns don't always exist, but when they're present, boy, you got to pay attention to them. And when you take a look at the low that was put in back here inside the euro-yen, this was back on March 28th. You've seen a nice move higher out here. You had a price relative strength divergent pattern. Now, we don't have the reversal signal. Well, we got a reversal signal in here, but that would be at 11 o'clock yesterday morning on yesterday morning, the high of 142.59, and prices above that level as we speak right now. So that's going to be your potential support area, 142.59. So how do you pay attention to this? Well, you watch the 120-minute chart. It's in Basil Chapman's show. Well, Basil Chapman's not a show. It's in the Chapman wave. This would be the peak E out here. So we want to be paying attention to it because you've got, in essence, two potential, on this intraday chart, on the 120-minute chart, you've got two potential, because they've not been confirmed yet, where you would see some type of reversal. So what does that mean? Does it mean the market's getting ready to sell off and move south? No, but it's where you could see the market start to give back certainly some of its gains out here, and why we want to be paying attention. Look, the third level of that Gartley, or of any retracement level, the 0.786 area, has been hit. There are folks that are going to get off of the elevator. There may be folks that traded this currency pair, and they use this price divergent pattern to go ahead and get in. At this stage here, there would be reason to say, you know what, I've made some good money. I'm going to go ahead and take my profits that hit a target level out there. So we'll be paying attention to this here because at this stage, we don't have a reversal. But this candle here ends at 11 o'clock. So we've got another 11 minutes left in the session. But by 1 p.m., you could have a reversal out there. And if you see the market pulling back, I guarantee you, go take a look at this currency pair, because if it's not pulling back, that's saying false move to the downside. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 62 points right now. We've got the NASDAQ up 22 points. It is the laggard up here. It's up 0.2%. Now, inside the New York Stock Exchange yesterday, we did have enough net advance and issues to turn the oscillators positive, both price and volume. That is bullish out here. If we take a look at the Dow futures, I've got that 120-minute chart up on my screen. And what you'll notice is a beautiful butterfly pattern that may form out here. In order for this to complete, price would need to move up to about the 16,564. It's another about 120 points north of where we're at right now. Intra-session high that we have seen here during this last 120-minute time frame is 16,488. So that is doable. Doesn't mean it happens today or what have you, but that would set up a now beautiful Fibonacci numbers in that range, in that 16,564 range. You'll see a 1.618 expansion of the B to C swing point. You'll see the X point, which X marks the spot, the beginning of the Gartley butterfly pattern. That was from 10 o'clock. That was on March the 7th. That's where it all began. And 1.272 expansion of that would be from that swing point high down to the low that was put in at 5:15 in the afternoon on March the 14th out there. Excuse me. Sorry for the hiccups there. On March the 14th, the low at 8 o'clock in the evening, and that was out at 15,911 out here. So we'll watch that area, see how the market behaves. Quick peek in on the New York Stock Exchange. Let's take a look at that out here. So the New York Stock Exchange, it'd be right now just taking on its most recent swing point high. Thus far, it's trading below that area. 10.548.12 is the swing point high from March the 6th. So we'll watch the New York Stock Exchange. Right now, you've got nice market breadth, 689. Well, I won't say nice. You've got decent market breadth, 692 net advancing issues. But, if today turns out to be a one-hit wonder, what I mean by that is I don't recall the number. Let me see if I can look that up here real quickly for you. If we're to see net declining issues, so we see a reversal of fortune, well, a big reversal of fortune inside the NYSE would be for it to close below 10,483.70. So that's a number that I can tell you. I don't have to look at what needs to be done. You get it close below 10,483.70 out there, and the New York Stock Exchange will have, in essence, turned bearish after one single trading session out there. That is not a good thing, and you'd also have a key reversal. I'm not saying that's what's going to happen. It's always incumbent upon us when you're trading out there to understand both sides of the trade. And if you can understand both sides of the trade, write them down on a piece of paper ahead of time, and before things happen, write down what you would do. When that comes to fruition, you won't be like a deer in the headlights, because doing what we know and knowing what to do, two totally different things out there, folks. I'd love to teach you both. And if you haven't had a chance to check out Mastering Probability, well, then now's the time to do it. The only cost to you is the cost of not doing it out there. So go to the homepage of TFNN.com, upper right-hand side. Or just click on my name. That'll go ahead and take it to Mastering Probability. So look in the middle section of the TFNN homepage there, and that will take you over there. If we take a look at what needs to take place for the bears to truly take control of the market here in the New York Stock Exchange, I believe it's 451 net declining issues or more out there. So right now you're at a positive 677, and that is good. That is bullish out here. So, folks, stay tuned. Our man Basil Chapman, he'll be up next after Basil, because it is Terrific Tuesday. We've got a full lineup. That means we go out to we've got the options hour on Tuesday, so that's your lunch. Session. Then we go to Daryl Martin with the Nadex platform. David White from 2 to 3. I see he's growing a little beard there out there. And then we've got Andy Heck and the Tom O'Brien Show from 4 to 6. Have a great trading session, folks. Thanks so much for joining me. Take care. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.